Recently, Saudi Arabia made a stunning announcement in the oil trading market. By exposing their plans for more oil supply reductions, they have startled everyone. The fact that this decision was made shortly after the OPEC Plus group of producers established output caps makes it all the more startling. Be prepared for a direct impact on American oil prices as a result of this action's cascading effects. It is imperative to examine the potential repercussions of this unexpected turn. What does this entail for the Western world and the global economy, then? In order to address the issue of weak Chinese demand, which has been driving crude prices below the important $75 per barrel level, Saudi Arabia is about to implement a supply reduction plan. The interesting part is that Saudi Arabia needs to maintain this pricing level in order to meet its financial obligations. Analysts predict that Saudi Arabia will keep reducing its production. In fact, rumors within the OPEC Plus coalition imply that an extension is very likely. Oh, the tension. Although we are aware that the kingdom's choices can sometimes be unpredictably made, the general consensus is that an extension is very likely. What's the big deal? Industry insiders warn that eliminating the supply restriction at this time will cause an uproar in oil prices. Reversing the cuts would be too hazardous because the market sentiment is as fragile as a soap bubble. Getting rid of the cuts, according to well-known oil expert and current hedge fund manager Gary Ross of Black Gold Investors LLC, would raise prices and show how vulnerable the market is. Since this development may have significant effects on oil prices and the stability of the global oil market, it warrants cautious observation. A credible report states that Saudi Arabia is likely to continue its current production cut of 1 million barrels per day after the initially anticipated termination date. This tactical action tries to ensure oil price stability, which has been a concern because of erratic global demand. It demonstrates Saudi Arabia's dedication to maintaining market equilibrium and preventing sharp price changes that could affect countries that depend heavily on oil. But now is where things really start to get interesting. A specific component of Saudi Arabia's anticipated decline in oil supplies has been clarified by industry analysts. In fact, reports claim that Saudi Arabia is thinking about cutting back on its oil exports to the US. Although the actual reasons for this choice have not been made public, experts believe that a variety of factors may have influenced Saudi Arabia's decision. These elements could be shifting trade relations, geopolitical concerns, or market dynamics that have caused Saudi Arabia to reevaluate its oil export policy. So why is this important? Well, there are a variety of reasons why this decision might be made, including reducing crude oil reserves, bolstering oil prices, or using it as leverage in discussions with the United States. It is therefore anticipated to have an immediate impact on oil prices. Jorge Leon, a senior vice president of Rystad Energy, believes that the initial output reduction may increase oil prices. However, whether Saudi Arabia continues this reduction will determine the long-term effects. According to Leon, Saudi Arabia's voluntary cut serves as a price floor, giving them the freedom to change production levels as necessary. This implies that as a result of this choice, oil prices may stabilize at a higher level. Unfortunately, this information may upset US drivers and shoppers worldwide who have been benefiting from decreasing oil prices. Their ability to fill up their tanks has become more reasonable because of the drop in oil prices, which has also helped to reduce inflation. However, analysts like Leon predict that there might be a modest increase in gas prices as a result of the anticipated reduction in the oil supply. It emphasizes the ambiguity around future fuel consumption, particularly in light of the sluggish economies in the US and Europe as well as China's slower recovery from COVID-19 limitations, which have sparked worries about the world's need for oil. Remember the surprise that Saudi Arabia and other OPEC members recently gave us? Just a few months ago, they conducted a significant 1.6 million barrels per day production cut, with Saudi Arabia cutting its output by 500,000 barrels per day. As a result of the decision's potential to increase fuel prices just before the US midterm elections, President Joe Biden criticized it. There could be significant changes in domestic oil prices and supply dynamics as a result of the influence on the US oil market. According to projections from Bloomberg, Riyadh would have fewer than 6 million barrels available for export following the implementation of this output decrease. The US oil market may become more constrained as a result of this drop in supply, raising costs for consumers. It might also encourage the US to look into new energy sources or depend more on other oil-producing nations. However, the real shocker is that it won't just affect Americans. It can have worldwide repercussions, impacting important economies and countries that depend on oil imports. These events demonstrate the complexity of the world oil market, where Saudi Arabia exerts a large amount of control over supply and pricing. It's critical to take into account the larger context of OPEC's decision-making process as we examine the issue. The two biggest OPEC oil producers, Saudi Arabia and Russia, have been aggressively working together to control oil supplies and maintain prices. Their cooperation has been essential in keeping the oil market's delicate equilibrium. Therefore, the dynamics of this alliance and the common objectives of its members are likely to have an impact on any choice Saudi Arabia makes about supply reductions. So, while we closely observe this developing situation, it's critical to understand that Saudi Arabia's actions could have a significant impact on the world oil market. This has an immediate effect on the US and has the ability to make domestic oil prices volatile. While Saudi Arabia's main market in Asia may see less disruption, these production cuts are anticipated to have a more pronounced effect in Western nations like Europe and the US. Quite intriguing, huh? Asian refiners have received guarantees from Saudi Aramco, the state-controlled oil company, that their needs for crude oil will be satisfied. Therefore, any supply reductions are more likely to be felt on the Suez Canal's western side. According to reports, Riyadh may reduce supplies to the US while focusing on supplying its usual Asian markets. Market tightening may result from this tactical choice, and inventory reports will show us how it affects the market. But here's a fascinating fact. Motiva, the largest refinery in the US, is also under the management of Saudi Aramco. This implies that they may have an impact on supplies to the massive 630,000 barrels per day processing complex in Port Arthur. Even if the US has decreased its reliance on Saudi crude in recent years, Riyadh may have a perfect opportunity to boost oil prices with this move. Because of this, Prince Abdulaziz bin Salman, the Saudi Arabian energy minister, said that the production cuts might go past July. And what's this? These cutbacks will supplement the voluntary cuts reached between Riyadh and other major OPEC Plus members like Russia, which will begin in May. Let's examine the figures in more detail. By the end of 2023, these daily reductions, which would total about 1.66 million barrels, will build on earlier accords. As of right now, OPEC Plus has reduced its supply by an astounding 3.66 million barrels per day. That represents about 3.7% of the world's oil demand. There has been a big impact. Saudi Arabia stands up as a significant role in affecting supply and prices as we try to understand the complexity of the global oil market. But it's crucial to step back and take the big picture into account. A trustworthy oil supply makes us think of the close cooperation between Saudi Arabia and Russia, the two biggest OPEC oil producers. They actively work together to control the oil supply and maintain pricing. The cooperation is essential to keeping everything in balance. We're curious about the precise impact on US oil prices and supplies, as reliable intelligence suggests Saudi Arabia is seriously considering a big cut in oil delivery to the US. This choice is a reflection of the continuous difficulties and ambiguities related to the demand for and supply of oil globally. It also emphasizes the complex dance that the major oil-producing countries engage in to control geopolitical circumstances and market conditions. Energy sector stakeholders are closely monitoring this situation as it develops for any changes that might have an impact on oil prices and the future of the global energy system. The United States could be directly impacted by Saudi Arabia's activities, which could also lead to instability in local oil prices. What are your thoughts on Saudi Arabia and OPEC+? And do you think they can crash the US economy? Let me know down below. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching, and I'll see you in the next one.